The issue is with that is because they have to refile the debt, you end up increasing the debt burden all the time.
Bitcoin Zella stands out with its simplicity and clarity. We've crafted an experience that anyone can dive into, whether you're a crypto expert or just a new to the crypto world. Now guess who keeps his eye on us? The author of best-selling book Rich Dad Poor Dad, Robert Kiyosaki. And we want to take this opportunity and thank all the people who trusted us, and we read every comment. And the best part, it's free. Subscribing now means you will get all new information for free. Don't just follow the trends, stay ahead of them. Subscribe to Bitcoin Zella today and enjoy the new edge. In this video, Raoul Pal dives into why 2025 could be crypto's biggest year yet. He unpacks Bitcoin's explosive growth, institutional adoption, and the future of digital assets. Let's catch him to learn more.
How do they deal with that? Because, they don't really want to do QE because everyone knows what the game is, which is money printing. How do they deal with the excess supply that comes from just having higher rates without, a lot of the debt increase is just the servicing of the debt itself?
Yeah, you, my friend, if you knew the answer, you'd be smarter than me. I have no idea how they get out of this. It's really tough. The U.S. now spends more on interest than they do on defense, which is a wild place to be. The deficit is 6% of GDP in literally the best of times. Like there's, full employment, everything's great. Like if you have a 6% deficit when everything's as good as it possibly get, what's going to happen when, some kind of rainy day shock happens. So I literally don't know. And that's why I'm so bullish blockchain, because it ain't going to be good for paper money is basically the answer. However, I don't know which way the government's going to try and get out of this, but the U.S. went essentially to an adjustable rate mortgage a while ago and financed all the debt at very, very short intervals. It's all coming due, as you say, has to be rolled over. Rates, used to be 1.3 for a 10-year. They should have done a lot of debt issuance at that level. It's 4.3 now, and it could be 5.3 or 6.3 in the next few years. So I really am worried, as an American citizen, like how's our government going to get out of this? Because they have an enormous amount of debt. They're piling on 6% of GDP every year. That's a huge new amount of debt. Rates are heading high. They're much higher than they used to be, heading higher. And most countries, when faced with that, inflate their way out of it. The U.S. hasn't historically done that. There's only 13 countries on Earth that have not defaulted on their debt or had inflation above 20%. The U.S. is one of them. So the U.S. hasn't done it, but they could.
My view is that they do it more slowly using debasement. So that's the liquidity, the printing of money in lots of hidden ways. There's lots of ways throughout the system. And from my measurement, the global central banks and governments combined are increasing the global supply of money or debasing the currency by about 8% a year. So it's a tax you don't see. Most people don't understand it. The price of scarce assets keeps rising because you're lowering the denominator. You know this from emerging market days. Most people don't really understand this mechanism, but that's what happens. So, your wages don't go as far and the assets keep going up to make housing unaffordable, and 8% a year. But the flip side of that is without doing that, you end up with a huge crisis, which is even worse. So it's a rock and a hard place, right?
No, I agree with you. And we have seen this movie before in the EM markets that we were in all those years. And inflating your way out by printing more money is really the common way people get out of this. And so I think it's going to happen. And that's why I think you're right that when you talk about the value of scarce assets when priced in paper money terms keeps going up, right? Gold's at a record high, stocks are at record high, real estate's record high, Bitcoin's record high. Maybe they're not moving. It's the price of paper money that's going down, right? And Pantera once did a graph that probably old Twitter feed would have of the price of all those things, price of the U.S. dollar, price in bushels of corn, a share of the S&P 500, gold, an ounce of gold, and it's pretty much the same graph. It's the price of paper money that's crashing rather than the price of all these things going up relative to each other.
The cryptocurrency market experienced a sharp drop today, with its total market capitalization falling by approximately 3% to $3.54 trillion. Major cryptocurrencies like Bitcoin and Ethereum saw declines of 2.6% over the last 24 hours, leaving many investors concerned about the factors driving this downturn. Part of the decline can be attributed to diminishing enthusiasm surrounding Trump trades. Initially, optimism was high that President Trump's return to the White House would result in pro-crypto policies. Promises of making the U.S. a global crypto hub and plans for a strategic Bitcoin reserve sparked hope. However, delays in implementing these measures and a lack of immediate executive orders on cryptocurrency have dampened the market's excitement. Concerns over potential favoritism in Trump's proposed policies, such as eliminating capital gains taxes on U.S.-born cryptocurrencies, have also created uncertainty. Beyond politics, broader economic factors are playing a significant role. Faster-than-expected growth in the U.S. services sector has driven Treasury yields higher, pushing investors towards safer assets. Meanwhile, a strengthening U.S. dollar, buoyed by tariff announcements targeting China, Mexico, and Canada, has added further pressure on riskier investments like cryptocurrencies. The Federal Reserve's stance on monetary policy has also influenced market sentiment. While markets had anticipated 3 interest rate cuts in 2025, the Fed's signal of only 2 cuts has introduced a more hawkish tone. Futures markets now suggest that rate cuts may not come until later in the year, creating a less favorable environment for speculative assets. From a technical perspective, the crypto market's total capitalization has lost critical support at the 50 simple moving average (SMA) on the 4-hour chart. This level now serves as resistance, while the relative strength index (RSI) has dropped from overbought conditions, signaling weakening momentum. If selling pressure persists, the market could test support at $3.43 trillion. Conversely, a resurgence in buying activity could help recover the 50-day SMA and push the market back toward the recent high of $3.61 trillion. Today's downturn reflects a mix of delayed policies, economic uncertainty, and technical challenges, leaving the market searching for stability amidst these headwinds.
What I've been doing at Global Macro Investor is dividing all assets via global liquidity, which is an index we build. And what you find is the S&P 500 has pretty much gone nowhere. There's a bit of growth driven by the tech stocks. Gold has gone nowhere. Real estate's gone nowhere. None of this has gone anywhere except NASDAQ and crypto, obviously, because they're both technologies that are being adopted and crypto's the big outperformer. So I found that, our hurdle rate for assets is 8% a year for debasement plus, let's say, 3% inflation is 11%, just as a hurdle rate, which people haven't got their heads around yet.
Yeah, and that really is the story for fixed quantity things like Bitcoin or other cryptos, is that if the governments around the world are currently debasing at 8% a year, they're probably going to have to speed up. Why be in something is being debased, right? Why not be in something that has at least kept up with inflation, like a bunch of those things you just mentioned, like gold and S&P? Or, hey, why not get into something? Our Bitcoin fund's 11 years old. It has a 90% compound annual growth rate, right? It almost doubles every year. That's pretty good compared to -8, right? Like plus 90 versus -8. And again, investors shouldn't put 100% of their net worth into crypto, but for the majority of institutions,
you and I have been there for a while. 100% of net worth.
No, that was probably not a good idea. Probably put a little pressure on the spouse and everything. But but if you're somebody who doesn't have any exposure yet, you really should have some to essentially hedge the risk that governments do continue to debase their currencies. If you think about currency debasement, it used to be pretty straightforward, right? When I was a kid, silver-colored money was silver, right? Like dimes and quarters were made out of silver, and now they're made out of some cheap alloy, right? And even pennies, right? Pennies used to be made out of copper. It's a 5-year criminal sentence if you melt a penny in the United States, because the intrinsic value of an old-school real penny is more than 1 cent, right? And so the government has to criminalize accessing intrinsic value there. And my favorite one is a pound sterling, right? Is, of course, used to be worth a pound of sterling silver. It costs 184 pieces of paper pound sterling to buy a pound of sterling silver. So governments are really good at debasing currencies. Unfortunately, I think they're speeding up, like all the stuff that you're talking about with deficits and paying more in interest than defense, speeding up. And so, again, that's why everyone's going to crypto. A couple 100 million people are using crypto now. 4 billion people have a smartphone, and that's all you need to operate crypto. So seems like a billion people will be using crypto in the next, say, 3-4 years.
Robert Kiyosaki, renowned author of Rich Dad, Poor Dad, has once again expressed his strong preference for Bitcoin over speculative cryptocurrency ventures, such as the newly launched Trump coin, UMP. On the social media platform X, Kiyosaki shared his thoughts on the official Trump coin, which debuted on January 17, just days before former President Donald Trump's inauguration. Shortly after, First Lady Melania Trump introduced her own meme coin and the LANIA. While both coins initially surged in value, their momentum quickly faded, leading to a decline in market performance. In his remarks, Kiyosaki dismissed the Trump coin's appeal, stating, "What do I think about Trump coin? Not much. Unfortunately, the whole crypto world is becoming a tranny, transforming from the future to a farce." This skepticism underscores his focus on investments he deems reliable and time-tested. For years, Kiyosaki has championed Bitcoin as a hedge against inflation and a dependable store of value, often referring to it as people's money. In his post, he reiterated his commitment to tangible assets, including gold and silver, emphasizing that he prefers real investments over financial instruments like ETF, rejecting exchange-traded funds as part of his personal investing philosophy. He stated, "I am old and I prefer real." Kiyosaki's bullish outlook on Bitcoin remains steadfast. He recently predicted that Bitcoin's value could soar to $250,000 by 2025, further solidifying his belief in the cryptocurrency's potential. His stance highlights a commitment to accumulating more Bitcoin, reflecting his broader philosophy of prioritizing long-term foundational investments over speculative ventures like meme coins. And do not forget to subscribe to Bitcoin Zella. The most important news will reach your inbox on a daily basis and for free. I do not know why you have not subscribed yet. If you liked the video, give it a thumbs up and subscribe for more daily updates. Remember, knowledge is power, and we're here to empower you on your financial journey. Until next time, happy investing.